Hi everybody, this is George Veter, President of Veter Financial Group, and I wanted to have a quick discussion with you today regarding volatility and how to mentally handle volatility, and that we are now approaching the last lap of September, and the volatility that we have kind of dodged since March has returned. And for a lot of people that I communicate with, that's been unsettling and been disconcerting to them. And so I want to just frame that so you know how I feel about having a volatile September. First of all, September historically, which I have mentioned before on previous podcasts, is statistically the worst month of the year in average rate of return for the last 70 years since the end of World War II. It has a negative average rate of return. So we don't expect September to be great. It's the worst month of the year on average over the last 70 years. Now, August is typically the second worst month of the year. But this year we had actually, the market did what we call climbing a wall of worry through August and got to new highs. That's when we got to the Dow 29,000 and a half, roughly, about 2,000 points higher than we are right now just a month ago, in typically a weaker cycle for the market, but wasn't this year. That's why you can't bet the farm on what usually happens, because the only thing certain is change. But we can identify trends, and we can build processes around the trends to be right most of the time. Not that we're market timing, but we can slant portfolios, we can time the repositioning or the reallocating of portfolios to make sure that we're always obeying those rules of finance that we know historically are correct, and they're finite in that they've worked throughout the ages. The idea of rebalancing when you have a volatile month, which means you're going to trim back your positions that have got ahead, which means you're doing a little selling high, and then filling in your positions in your portfolio that have been damaged the most, which are temporarily, or at least seem to be temporarily lower. So you take what you bought, what you sold high, and then you do a little buying low with that extra money. And we usually do that seasonally the first part of October to do something good with this. Also, any positions that go negative during a volatile month, we will go ahead and look for those. If they're in your non-qualified accounts, non-IRA accounts or pension accounts, we'll do tax loss harvesting, which means we will do substitutions for those funds so it constitutes a buy and a sell and locks in a loss that you can write off your taxes. We'll make sure you stay in that space. So, for example, you might be down in your small cap value position because it hasn't done well this year. We don't want to get you out of that position because we want you to be able to come back with small caps when they're back in favor, because there's always a rotation of asset class. But we want to be able to sell it and then buy an additional similar small cap value fund to exchange or replace it with. So it constitutes a buy and a sell, therein locking in your loss. So it gives you a benefit tax-wise. But you are still in the space, just in a different fund in the same space with the same type of track record, so that you get the recovery. We never want to put you in cash in something that's done bad in a bad moment. That's again against the laws of how finance has benefited you and what rules you should be obeying. So we will do substitutions, replacements of the funds that have gone down the most, if we can create a tax write-off for you and lock in a loss and then get you another substitute fund to recover with. So those of you that do business with me, you know that we always look in every market decline, we look for ways to do tax loss harvesting. I have someone in this office that's dedicated all the time to looking for those opportunities and sifting through our account base to do that. So here's how it typically flows from here. We don't expect the market to turn very bullish, even though, again, we never know. But based on historical pattern, we really have a few weeks here till we would expect things to get positive again. Usually the next event for the market that will create some momentum in stocks on a normal year will be the third quarter earnings that start reporting the second week of October. Then the market starts trading on earnings, not just on fears. And if we have an acceptable earnings season, that earnings are better than, or at least as good as, were forecasted the previous quarter, then the market usually will trade on that in a positive way. It takes about 30 days for publicly traded companies to have announced all their earnings, so we have about 4 weeks of those announcements. By the time we get done with earnings season, which again usually turns the market positive, and I personally expect that this year, we will have gotten past the election, which is a point of uncertainty, that the market doesn't like uncertainty. That will be behind us one way or the other. We'll at least know the cards we're playing with. And then by the time we are dried up with those earnings and we've got the election behind us, now the market will turn its attention to the Christmas season. So we will be in November, and when all the Christmas sales start and the consumer season gets into full stride, which will last through the end of the year, right through Christmas. We call that the Santa Claus rally. And historically, again, giving you the 70-year history post-World War II, we've had our very best month on average by a lot in December. The second best month on average by a lot is in November. Then the third best month on the calendar on average over 70 years is in January. So that rolling quarter, November, December, January, starting, the prelude to that is usually earnings season in the middle of October. That's when, on a normal year, we make the bulk of our gains for the year. That's when the action happens. So actually, a volatile September plays into our hand. We've gone down about 2,000 points roughly on the Dow since we hit the high in August. I have people that are concerned about that. To me, I'm celebrating that. I always keep some cash myself for this time of year to put money to work, in the best season to put money to work at the lowest spot on the calendar on average. Well, that's where we are. And going into the fourth quarter that we depend on for the Santa Claus rally and the January effect, when the pension flows hit after the first of the year, if we have a dip in the market like we're getting, that makes the market more compelling. That gives us a better launching pad into that fourth quarter to finish strong for the year. So just want to let you know, this is not unexpected to have a volatile September. A month ago, the headlines were best August we've had in 18 years, right, on CNBC. And now all of a sudden we're talking about the worst September we've had in years. Just please, don't get obsessed with the news cycle when you might get nervous. That's why I do these video blogs, so you know what I'm thinking. And I'm not going to sell you a newsletter, and I don't need to give you some kind of compelling news that triggers you to make sure you tune in more often, right? You understand what I'm saying? I've only benefited when our portfolios go up. When, just like you, I'm compensated, with advisory fee basis. So the only way I get a raise on my block of managed money is if we do better. Then I get a raise because my same fee on a greater sum of money. If things go down, I get a cut in pay. So honestly, all of us are on the exact same page, not just for my moral conviction to do what I do, but also for my financial reward. Our fortunes are pinned together, and September is supposed to be volatile. I'm grateful that it's volatile this year. It'd be weird if it wasn't. If we just kept going up through September, I'd be worried that we might have another aberration for the fourth quarter and not have our normal fourth quarter. But this sets us up for that. So, bottom line, just enjoy the important things in your life. Take care of your health. I can't do that for you. Enjoy your relationships. I can't do that for you. Let me worry about this stuff because it's what I do, right, professionally, and no use in two of us worrying about the same thing. I got you. I'm grateful I have this medium to communicate with more than one person at more than one time. I'll continue to do that so you know where my thoughts are. Please communicate with us. If you have any questions, I love taking questions from people. You don't have to wait for your next scheduled visit, or you don't have to wait until you come in to interview with me. Just pick up the phone, give me a call. If I'm in a meeting, I will return your call when I get out. There's always gaps scheduled for me to return those calls. And the more communication, the more I feel we can create a very valuable relationship. So I'm totally open to that. Thank you again. Enjoy the fall. Enjoy moving into the holiday period of time that should be the happiest for all of us, when we can soak up those relationships that make us the happiest. So God bless. Thank you for this minute.